Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Indian equities are braced, or rather set for a positive start in the last leg of the earnings heavy week. PSUs expected to be in focus for the week itself and in today's session too. Well, GIFT Nifty indicates a positive start coming in for Indian equities, up with gains of roughly more than 0.25%. S&P overnight, actually on Friday night rather, closed above 5,000 for the first time on Friday, and Nasdaq briefly traded above that 16,000 mark. Asian shares track Wall Street higher. China deflation risk persists. Now, China's CPI fell 0.8% in January from a year ago, the biggest drop since 2009, and missing the forecast for a decline of 0.5%. FIIs, they've bought in equities to an extent of 141 odd crore. The amount remains rather minuscule, the trend that has rather been playing out. DII have sold in shares to an extent of 421 odd crore. If you talk about earnings that you need to watch out for overall for the week, there are more than 1,000 companies which will be reporting in the numbers, and overall 480 companies which will be releasing their quarterly earnings scorecard on Feb 12th. This includes the like of Coal India, Bharat Forge, and also something in the likes of Dilip Buildcon, HAL, HEG, and Mazgaon Dock. These are some of the names which are expected to be in focus. Well, stocks that come under F&O ban or the F&O highlights there. Addition is Z Entertainment, and what has been retained is Ashok Leyland, Aurobindo Pharma, Balrampur Chini, Biocon, Delta Corp, Hindustan Copper, India Cements, and Punjab National Bank along with SAIL. What has come out of the ban is NALCO. Also, do bear in mind the fact that there is a bit of rejig which will happen for MSCI. It's the Feb update that will essentially, the announcement of the rejig is expected to come through tomorrow. PSUs are ruling the inclusions there, and India could see an upward flow of around $800 million. The adjustment is set for Feb 29, 2024. India currently holds approximately 17.8% representation to the MSCI EM index, and following this rejig, the country's representation is expected to move around that 18.5% mark. Well, small cap like Cello, IRDA, Honasa, GPA are expected to a lot more to make the cut, with very few exclusions out there. But let's get going with the strategies, levels, and the top recommendations of the day with Prashant Sawant, Catalyst Wealth. Morning there, Prashant.
Morning, Nikki, and good morning to all the viewers.
Okay, how's the week looking like? Trade setup, do you think PSUs are expected to be in focus? If yes, which is the one that you're watching out for?
So I think the stock that is on radar for me is Coal India, and it looks good. Looks headed to higher levels of around 470, 475. But overall, I'm more bullish on the PSU banking sector. So SBI stands out for sure, followed closely by Canara Bank and Bank of Baroda. I think SBI, any dip on SBI to around 700, 710 levels for any reason, I think will be a great level to enter. And with stop losses at around 685, 690, one can look out for targets around 750.
Okay, also let's chat about the trade setup for Nifty. What are the strategy one can look at, the levels one could follow, immediate support and resistance level too along with that?
So, Nikki, one thing which happened last week is we tried to approach that near that 22,000 spot level, but we faced a stiff resistance, and we have tested 20-day moving average on Nifty, made a low of around 21,630 odd, and are quoting around 21,800 again. So 21,800, 840 zone happens to be a major resistance for Nifty. If we happen to close above that, I think we can once again aim for 22,000 in spot. But overall, my view would be to avoid trading the index for these 150, 200 points, because it is extremely tough and it is a clear option writer zone. So better way is be stock specific, avoid the index as far as Nifty is concerned, and enter the index only and only if you see spot closing about 22,100, which has not happened till date. So if the spot closes about 22,100, I think that would be a clear-cut decisive move in one direction, or a break of 21,500 in spot. But I think either ways, the current week looks again in a consolidation mode for Nifty. As against this, when I look at Bank Nifty, I think that is something which is in a little bit of a good spot as compared to the support, and the support is very near. So we are trading around 45,600 in spot. and 45, 300, 200 zone is a very good support. So I think with a 1% risk, say around 45, 100, 150 stop loss, one can go long on Bank Nifty and aim for targets around 47, 200, 47, 300 for the week ahead.
All right, that was just in time, but do bear in mind the fact that PSUs are expected to be in focus. We've seen some serious damage done. Friday was the first sign of warning coming in for the markets, for the PSU stocks at least, and PFC, RVNL, and for that matter, NHPSC was down by 5 to 8%. On Friday, from highs, they were down by 20 to 25 odd percent. PSU basket is expected to be in focus, but here it is. Markets have kick-started the earnings heavy week, well, at least on a flat start with a bit of positive bias. Not really an encouraging picture. We are also going to be looking at the inflation data through the course of the week, and but Nifty 50 at this time, well, it is a very flat start coming in for the markets. 21,000, nearing to that 21,800 mark, but just shy of that mark. Bank Nifty, well, a very lackluster start even for Bank Nifty. No different out there. Perhaps a bit of underperformance, I would say, for Bank Nifty, but only the session, through the course of the session, we'd be able to navigate through further. State Bank of India and Canara Bank, Bank of Baroda, beg your pardon, this Prashant's top recommendation on dips. Mid-cap index, there it is, a bit of strength, perhaps not even strength, right? I mean, it's just flat start with a bit of positive bias. There's nothing sort of a start coming in for the markets. Let's pull up top gainers and the top losers just to see where the trend is typically, or let's just say the stock which are perhaps gaining a bit of momentum there. Well, advances and declines there, right there on your screen. 1,000. Well, clearly you can see the market breadth is in the favor of advances as compared to that of declines. Metal index is doing perhaps a bit of, a bit of outperformance coming in for that one. Nalco also has done extremely well within the basket, and Auto also is witnessing fair bit of selling pressure coming in early deals. No difference. Let's pull up PSU and PSU Banks, because these are the ones, these are some of the sectoral indices that you need to take a note of. And there it is, PSU Bank, almost 0.5% of losses coming in for PSU Bank. And just for the index per se, you also have HeroMotocorp, which is reported in the numbers, and we need to see how that stock is really doing. But right now, PSU Banks are completely down and out with losses to an extent of 0.5%. Not severe losses there, fair bit of selling pressure, let's just say, is mounting in for PSU Banks at this time. Prashant, coming on this one, we are going to be also addressing in the top gainers and the top losers in just a jiffy. But first, within Nifty 50, you're seeing DV's Lab, Dr. Reddy, Wipro, UPL, and HCL Technologies. Well, see, these are some of the top gainers that we have on our list right now. So you have most of the IT stocks which are doing well in trade. We have HCL Tech, Infosys, and Wipro, along with also the metal names like Hindalco, JSW Steel, Tata Steel. These are some of the top gainers. On the losing side, you have HeroMotocorp, Power Grid, ONGC, State Bank of India, and Coal India, along with NTPC, which is the top loser. Prashant, coming back to you, what do you make out of it? First, a lackluster start to the markets. Second is, you've seen these IT stocks doing extremely well along with metal counters. What's your pick within the two space?
So I think, Nikki, one stock which from the mid-cap IT space is looking good is definitely Birlasoft. And I think it's quoting around 838. So one can go long with stop losses positionally around 820 zone in the spot and look out for targets around 875, 880. I think this is one stock which has definitely outperformed the space, whether you talk about mid-cap or the frontliners as well in entire IT. So I would stick to this. And since it has given a good dip to 20 moving average, it is a great buy. So I think I would recommend this. One more stock which is standing out based on the opening is Oro Pharma. I think it's showing a lot of strength as against the weak opening and quoting around 1030. So I think this is one which can be added from a long-term perspective. Stop losses around 1000 and look out for targets around 1080, 1090 as well.
All right, those are top recommendation coming in. Let's also pull up stocks and news essentially, and then go back to Prashant and check with him of what does he make out of these important developments that we are seeing across the counter. But what I'd like to pull up first is essentially the earning profile coming in for HeroMotocorp. because that's the measure that we are looking at. Revenue is up by 21% for this one, and EBITDA is up almost by, you're seeing a growth of 47.37% coming in for HeroMotocorp. Well, if you compare the EBITDA estimates a bit higher, well, you would see the stock is right now trading lower by 2.82%, nearly 3% losses clocked in for HeroMotocorp. The margins have expanded to 249 basis points to 14% versus 11.5% rather. Net profitability has picked up pace, 51% there. But what Goldman Sachs has to say about HeroMotocorp is essentially it's maintained that sell rating and the target price of 3,730 rupees. It sees that the Q3 is more or less in line with the estimates. The company seeks market share pickup in EVs, and FY25 industry revenue growth is expected to be in double-digit range for HeroMotocorp. So that's that when it comes to, Goldman Sachs. What Nomura has to say is maintained in that neutral rating and suggested that it's the right strategy to lift growth and market share. Q3 margins are, of course, in line, and the execution, EV and Harley, these are the key monitorables for the re-rating. And, of course, the double-digit industry-level growth is what even the brokerage has highlighted coming in for this one. But, Prashant, HeroMotocorp, a bit of losses coming in on that one. What do you make out of it?
So I think, Nikki, it would be a good dip to enter and wait for some time. Don't be in a hurry. I think it has not yet corrected around a 30-35% move in the last couple of months. So even a 5-7-8% dip would be a good dip. I think levels around 46.50, 46.35 would be good levels to enter. So I'd keep it on my radar, but not be in a hurry to enter. I'd wait for dip to continue. And as I said, the levels I would be watchful would be 46.50, 46.30.
All right. Also, I'd want to chat about NSE. The revenue is down by as much as 23% for NSE. I beg your pardon. The EBITDA is down by 3%. Beg your pardon on this one. Let's further ask Prashant on PSU Banks in that case. PSU Banks, within that space, what do you like?
So I think, Nikki, as I said, SBI and Canara Bank have rallied a lot. I think the one which is catching up is Bank of Baroda. So one can look out for longs in this counter, currently quoting around 266, and keep stop losses around 255 spot closing positionally, and look out for targets around 290, 295. I think this stock is looking for a big breakout, and I think it can do really well in the PSU banking space.
Okay, Prashant, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation right here with us. All right, now let's quickly navigate our conversation to Pankaj Pandey, who heads the retail research at ICICIDirect. Morning there.
Hi, good morning. Thanks for having me.
Pleasure is all ours. Well, it's the last leg, or rather just say it's an earning heavy week. More than 1,000 companies reporting in their numbers in this week. More than 400 companies reporting the earnings in this session, in today's session itself. How's your assessment been so far for the Q3 updates that have trickled in? And also within the earnings space, what do you like?
So overall earnings have been better, and in fact we have been seeing that even it is also because of the fact that the last year base was lower, and so from that perspective, even for large caps also, the earning profile is quite better. Revenue growth was expected to be in sort of low double digits. So those are sort of largely on expected lines. I think one sector which is sort of surprising us is the cement as a space. We have seen most of the companies coming out with a good set of numbers. Now, there are some companies where the volume growth is good because they have been undertaking capacity expansions. And I think the margin recovery has been quite good for most of the companies. So we like most of the lot, right from, say, Ambuja Cement to, say, something like even a small cap or mid cap player like Birla Corporation or Sagar Cement. So I think cement is clearly looking good to us, and our sense is that even the next quarter things are going to be good for them. So because of the lower raw material prices, and plus, I think if we sort of take out the election period, then our sense is that this is one space the valuations are reasonable, and overall going forward, growth is going to be good, and so I think this is one space which is clearly sort of looking quite good to us, besides the infra as a space also.
Sure. What I typically want to chat about is the PSU names a bit. We saw the first warning sign coming in on Friday. We saw severe amount of losses for some of the names, right? Something like PFC, RVNL, SGVN, NHPC. They were all down by 5 to 8%. And if you see from their highs, RVLN at least is down by 25%. BEML also has traced back by 22% and SCI is down by 20%. Of course, these are also the stocks which have been in focus after a bit of endorsement which has come through from the PM's comments out there. And with biggest of the lot, of course, is also going to be LIC and State Bank of India. Within the PSU space, what do you like? Which theme typically do you like within that space? And what's your top pick there?
So within PSUs, we like certain things. So for example, within banks, SBI is our top pick with a target price of 800. I think this quarter profitability was sort of one-off, and our sense is that company will be able to maintain the 14% kind of a growth rate, which is quite decent. Deposit growth is also fine. We like the valuation at 1.2, and on top of it, if the yield sort of declines by 50 bips this year, this company can see profit jumping up by 10%, largely because of treasury gains. So otherwise, in most of the tier 2 PSU banks, I think we have seen a good amount of rally. So I think comfort lies with SBI to a large extent. What we also like is some of the other themes. For example, on the mineral side, both Coal India and NMDC look good to us. I think this is one space where we haven't seen much of a sort of a growth. For a company like Coal India, our target price is about 500. Now, this stock is coming up with a dividend, is offering a dividend yield of nearly 7%. Plus, we are seeing volume growth being quite good. So this is another stock what we like. We also like NMDC. I think there also the volume growth has been good. So I think this is another stock which we like, and valuations are also relatively quite comfortable. Not really liking the PFCs and RECs or IRFCs of the lot because of the kind of a price performance we've already seen.
How about something like a Tata Power? It's also come out with numbers, and Morgan Stanley typically has to say that earnings was a miss driven by the slower growth in the regulated business and lower margins in utility scale renewables. The commission of RE also remains sluggish for Tata Power. I mean, the EBITDA is barely up. I mean, you're seeing 3.5% uptick there. The top line is almost flat. We've not seen any amount of traction coming in on the margin front. But within that space, what do you like and your view in specific for Tata Power?
So Tata Power don't have a view, but Power as a sort of a segment has done very well. What we are liking in the Power is only NTPC. I think this is one company where you have got a fair capacity on the thermal side. The PLFs have been improving. And this is the only company which has got a good or a sizable balance sheet to sort of scale up their RE portfolio to about 60,000 plus megawatts going forward. So I think NTPC looks a lot more attractive to us. Valuation-wise, it's quite reasonable compared to a lot of either the other PSU peers or even the private peers. So I think NTPC is our topic there.
How about Inox Wind? I mean, stellar set of numbers there. The revenue is shot up by more than 120%. There is a EBITDA turnaround versus EBITDA loss in the corresponding quarter. Margins have come in at 18%. There is a net profit versus net loss. What do you make out of that?
So don't have a coverage on Inox Wind, but in general, renewable as a space looks quite good, and the entire equipment segment in that is likely to do well, given the fact that opportunity pie is fairly large. So this is a very interesting space, but like I said, really do not have a stock specific here in this segment.
Okay, how about the upstream companies, something like an ONGC, RIL? ONGC has also reported in the numbers a bit muted. Revenue is down by 1%. We're seeing some amount of operational slide coming in terms of the EBITDA performance. Net profitability is down by 6.5%. What do you like within that space, if at all do you like in the first place?
So one is when you look at the entire oil and gas space relative to all the PSUs, it is one space where the valuations are relatively a lot more better. A lot of these companies are single-digit P multiples. Now, the challenge is that overall, our sense is that energy or oil and gas consumption is going to be a lot more better compared to what we see globally. The other aspect is that for a company like ONGC, I think their period of stagnation in terms of their overall crude oil production, I think is largely behind us. So from that perspective, things will incrementally improve for these companies. And even for OMCs also, our sense is that the GRMs are still quite healthy. One is not too sure on what will happen to the marketing side, because you always have this fear that the government might cut the retail prices, given the fact that crude oil prices are soft and you are sort of heading to elections. But I think most of these companies are sort of trading plays. It is very difficult to take a very portfolio view on some of these names, even though they are attractive at the current levels.
Okay. What I'd also want to chat about is IT space. It's doing well in today's session. We're seeing fair bit of traction coming in from Infosys, Wipro and HCL Tech, essentially. Do you like that space at this point? Do you think most of it has bottomed out? We've seen some fair bit of rally coming through, which is on sustained basis and not, which is something which is reversal of mean of sorts for the IT space. And within that category, do you prefer mid cap more or large cap more? On what basis essentially?
So I think within IT, structurally we are not very positive, because our sense is that they might sort of deliver 5 to 7% kind of a dollar revenue growth. Currency depreciation is not really going to help much, so they are not really going to outperform Nifty earnings. But since we are seeing a quite resilient US economy, so from that perspective, probably in the next 1 or 2 quarters, overall, while the deal pipeline has been good, but overall one could see incremental improvement in the revenue growth rate for some of these companies. So from that perspective, you could see a tactical bounce in some of these names. Some of it we have already seen. What we would like more is, say, something like Tech Mahindra. I think that is one company. If it comes with a credible plan for growing growth forward, then I think this stock is available at quite an attractive valuation. So I think Tech Mahindra relatively within the period look good. Otherwise, most of the companies, at least tier ones, are fairly sort of valued compared to the kind of what growth rates they are expected to deliver in the near term.
Right. Also there is fair bit of listings which are coming through in the week, through the course of the week, something in the likes of APJ Surendra Park Hotels. That's the one company which is expected to, which is going to be listing in today. And it's expected that there's going to be a good 15-20% sort of a premium coming on this one because of the kind of oversubscription that has come through the profile. Of course, we also have Rashi Peripherals, Jana Small Finance Bank, Capital Small Finance Bank, which will get listed on Feb 14th. But within the space, the new listings, is there anything that you're focusing this time around for the week?
So generally, from a listing or companies which get recently listed, we generally do not chase most of these companies, largely coming from the perspective that overall our sense is that let this sort of dust settle down, because you see a lot of euphoria with a lot of stocks during listing time. The company's numbers usually tend to be very good. So we would sort of take a very, we usually take a call when most of the investors were to sort of sell, have sold out, and the stock is in a more sort of a less euphoric phase. So at this point in time, we're not really chasing most of the PSU stocks. IPO stocks.
Okay, all right. What I'd also want to talk about is Paytm. Some serious allegations against Paytm. Of course, the center has been examining FDI flows from China in Paytm payment services. Serious wealth destruction has also taken place for Paytm. What is your view on this one? Are you suggesting, are you giving a buy rating now at these bottomed out levels, or you think it's one of the stocks that you're better off from your portfolio?
So we haven't tracked Paytm. Like I said, most of the IPO stocks we have not really sort of chased. But I think one should not really sort of chase Paytm till the time regulatory uncertainty is over, because it's more like sort of catching a falling knife. Very difficult to sort of take a call till the time regulatory uncertainty still persists.
Right, Pankaj, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation here with us.
Pleasure interacting. Thank you.
All right, what I'll also want to talk about is some amount to fair bit of action within the primary market and of course now the listing space. APJ Surinder Park Hotels. The Park Hotel is set to list its equity shares in few moments from now. The final issue price has been fixed at 155 per share. The stock is expected to make a decent debut on exchanges. Analysts expect the shares to list at 20 to 25% premium over the IPO price, somewhere in the range of 185 to 195 per share. Within the week, it's not just APJ, it is also Rashi Peripherals, Jana Small Finance Bank, Capital Small Finance Bank, which will be listing in on Feb 14. Antro Healthcare Solution will close its subscription on Feb 13. And that's the update that we have when it comes to just the listings. But with this, it's a wrap and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.